In the past 24 hours, the cryptocurrency market has seen a series of pivotal developments that could reshape its trajectory and set the tone for the months ahead. First comes the long-awaited conclusion of the legal battle between Ripple and the U.S. Securities and Exchange Commission. This lawsuit, which has been ongoing since 2020, has finally reached its end. The SEC withdrew its claims, both parties agreed to drop further appeals, and the case was officially closed. Despite this, Ripple is required to pay a $125 million fine. The resolution lifts long-standing restrictions that hindered institutional XRP sales, potentially giving the asset a fresh growth impulse. With legal clarity now in place, XRP could see broader adoption in real-world transactions, rebuilding investor confidence, and attracting larger players back into the market. Meanwhile, Bitcoin is demonstrating both geopolitical and technical maturity as its global hash rate has reached a record-breaking 892 exahashes per second, a 2 increase from the previous week. This surge reflects growing mining activity worldwide and heightened interest ahead of the upcoming halving. A higher hash rate indicates a more secure and resilient network, but it also intensifies competition among smaller miners. For investors, this is a clear sign that mining operations are becoming increasingly professionalized and integrated into Bitcoin's ecosystem, further reinforcing the asset's security and long-term viability. The halving, expected next year, is likely to add even more pressure on mining profitability, making efficiency and scale key factors for survival. Ethereum has also been making waves, with its price surpassing $4,200 despite a steep decline in NFT activity. The number of NFT buyers has dropped nearly 90. This suggests that ETH's rally is being fueled more by institutional flows and spot ETF inflows than by retail-driven demand in NFTs or DeFi. The price surged by around 7-8, and analysts have noted significant long positions being taken, alongside potential large-scale liquidations that helped push the rally higher. On one hand, this is a strong bullish sign. On the other, it raises concerns about sustainability if retail engagement and on-chain utility don't recover soon. Institutional capital may not be a permanent driver unless underlying user demand strengthens, which could leave ETH vulnerable to sharp corrections. In a landmark move for the banking industry, El Salvador is set to launch the world's first Bitcoin-only banks, requiring a minimum starting capital of $50 million. These new institutions will operate exclusively in BTC, introducing an unprecedented model of financial interaction built entirely around a cryptocurrency. This is a bold step toward institutionalizing Bitcoin and testing its viability as a backbone for banking operations. It raises important questions about risk management, liquidity provision, and regulatory frameworks. If successful, the initiative could inspire other nations to create their own specialized crypto-centric financial institutions, potentially accelerating the shift toward a more decentralized global financial system. Finally, there's a major political shift favoring crypto assets. Former U.S. President Donald Trump has signed an executive order allowing cryptocurrencies, real estate, and private equity to be included in 401k retirement plans. This opens the door for alternative assets to tap into a $12 trillion market. Regulatory agencies will now have to develop detailed guidelines for implementation. While the decision strengthens crypto's legitimacy as part of long-term financial planning, particularly among younger investors, experts warn of increased risks, including volatility, low liquidity, and potential legal disputes if investors lack adequate education. Nevertheless, this policy marks one of the most significant integrations of crypto into mainstream financial structures in U.S. history. Overall takeaway, today's events reflect a maturing crypto market. From resolving legal disputes and reinforcing technical security to pioneering new banking models and gaining political endorsement, these developments indicate that cryptocurrencies are steadily transitioning from niche assets to integral components of the global financial system.